Good afternoon, everybody. This is Bob Iacino from Path Trading Partners, along with my co-founder, Mike Arnold. It is July 16th. This is a weekend update Path chat covering the futures markets. You can see the VIX on your screen right there. I'll zoom in on it for you. And you can see that there is still no fear in the markets. We closed at the lowest level of the year on Friday that I'm sure Mike will go into that. Let's go do a little weekend review as we always do. Global equities edged up this week, solid gains. Bank earnings were not strong enough last week. We got Citigroup, we got Wells Fargo, we got PNC, we got JP Morgan, and we got some regional banks as well. And the earnings, while EPS beats were common, were disappointing in terms of revenue, loan growth, and the like. So the financial sector got hit. It was the worst performing sector on Friday. As a matter of fact, it was the only sector that was down. And the banking sector, if you took it out of the financial sector, was the majority of that drop. Yield on the 10-year note faded slightly, about 7 basis points to about 232 and toward the end of the week, while the WTI price for crude oil moved back up to $46.35 a barrel from $44.50 a week ago. Janet Yellen was the biggest news for the week. She testified before the House Financial Services Committee this week, as well as the Senate Finance Committee. She reiterated that the Fed expected a tightening labor market to lead to increased inflation, despite current weak inflation data. We got a CPI number this week that, again, it was the 4th or 5th month in a row. I'm not sure, don't quote me on that, but the 4th or 5th month in a row that year-over-year inflation had actually dropped. So 2% is a long way away at this point, with year-over-year inflation in the U.S. being at about 1.6% now. She added that the Fed may change course from its policy plans if needed. Last month, the central bank raised rates for the third time since December 2016. She did mention that this year would be the beginnings of the balance sheet reduction. She talked about how it would be operating quietly in the background and nobody would really notice it. And it seemed that there was some implication that it would start somewhere around September. At least that's what some of the shops are saying. But we'll see. Again, most of the data, 2 of the 3 big pieces of data we got last week were weaker than expected. So I don't know. She may have to change. The dollar got kind of weak. The G20 summit concluded. Japan and the European Union signed the Japan-EU Economic Partnership Agreement. They've been negotiating that thing for several years. Bank of Canada raised interest rates by 1/4 percentage point. So it's now 0.75%. They also suggested that monetary policy will remain accommodative for the foreseeable future. They're worried about the stability of the housing market. Prices have risen pretty rapidly in recent years, especially with the influx of trade involving Canadian crude oil. And this has been particularly true in areas such as Toronto and Vancouver. Prices have doubled since 2009 for homes in those 2 areas. I mentioned some of the economic data. Headline retail sales for the U.S. down 2% month over month, with 6 of the 16 categories falling into negative territory. Department stores were crap. 0.7% was the fall in department stores. That's the second month in a row that it's fallen that much for department stores. And then we mentioned the CPI, although the industrial production numbers weren't that bad. That's really about it. Yellen really dominated it. And then the US CPI kind of took over from there. Let's take a look at the calendar. I'm going to be a little bit more brief on the calendar than I have been in the past and just cover some really, really important high-end things. It's just too much information in a video. So I'm just going to hit the high-level stuff and what the estimates are for that, the things that I think will be most important during the week as opposed to some of the background things. So for example, we're getting China's gross domestic product year over year expected to be at 6.8% versus a previous of 6.9%. And the seasonally adjusted GDP expected to come out at 1.7% versus 1.3% previously. Most important things coming out on Monday, really a slow data day. Eurozone Consumer Price Index month over month and year over year. This is the revision. Year over year expected to be up 1.3% versus 1.4% in the initial number. And the month over month expected to be unchanged versus down 0.1%. The core expected to be 1.1%, and that would be unchanged. Also, I have Canadian existing home sales month over month coming out, and the Australian Central Bank's July rate meeting minutes. So that's really it for Monday. Tuesday, July 18th, 3 a.m. Central Time, we've got the ECB Bank Lending Survey coming out. And then 3:30 a.m. Central Time, UK Consumer Price Index year over year. Now, this one's important. It was 2.9% last. This is also an update of that figure. The core consumer price was 2.6 last. Those are both expected to come in at the same level, 2.9, 2.6. And the UK is really under the gun to look at rates because they have about the highest inflation rate of the countries that we normally talk about, meaning China, Japan, the EU, the UK, and the US and Canada. So it's pretty high, and the UK is coming under pressure. The Bank of England is coming under pressure more and more to take a look at their rate structure. 4 a.m., we've got the German ZEW Survey of Economic Sentiment, and we've got the Eurozone ZEW Survey of Economic Sentiment. The Eurozone one is expected to come out at 36.8, 37.7 last, and the German ZEW is expected to come out at 18 versus 18.6 last. Wednesday, July 19th, biggest things, Aussie employment change and their unemployment rate. They're expected to add 15,000 jobs and have a 5.6% unemployment rate. They added 42,000 jobs last time, and they had a 5.5 unemployment rate last time. That's all coming out at 8:30 Central Time. That's 8:30 p.m. Some secondary stuff coming out. You've got U.S. housing starts and building permits at 7:30 in the morning Central Time. No big deal on those. Housing starts expected to be up 5.8% versus down 5.5 last. Building permits expected to be up 3% versus down 4.9 last. So it's not that high level of a number in terms of being market moving, but considering how negative they were last time, and they're expected to make up that and then some. We'll see how that comes out. We've also got the Department of Energy crude inventory numbers coming out as well. Thursday, you've got a pretty busy high energy day. You've got the Bank of Japan's 10-year yield target expected to stay at 0. You've got the Bank of Japan's monetary policy report and their outlook report and their policy balance rate still expected to be negative 10 basis points. Then you've also got Bank of Japan's Kuroda's press conference, which comes out after all of that. So look for it to all come out around 1 a.m. Central Time. Kuroda speaks about 1:30 Central Time. Then about 6:45 a.m., European Central Bank rate decision expected to be unchanged at 0%. The marginal lending facility rate expected to stay the same at 25 basis points. And the ECB deposit facility rate expected to stay at negative 40 basis points. The asset purchase target is also expected to remain at euro 60 billion. And then 7:30 a.m., you've got the usual in Chicago with the jobless claims and the continuing claims. But then you've also got the Philly Fed Index coming out. That's expected to be 23.7 versus 27.6 last. 9 a.m. Eurozone consumer confidence expected to come out down 1.1 versus down 1.3 last. And then the U.S. dollar leading indicators at 9 o'clock. Again, that's leading indicators for June, expected to come out at 0.4% versus 0.3 last. Anytime we get the misleading indicators, I'm always sort of skeptical about it because it's July 20th and these are the figures for June. That's why in the old trading floor days, we used to call it the misleading indicators, just kind of old data. And finally, Friday, we've got UK public sector net borrowing in pounds expected to come out at 4.2 billion versus 6 billion last. That's at 3:30 in the morning. Then at 7:30 in the morning, again, it's all Central Time, Consumer Price Index month over month and year over year for Canada expected to come out at 0 versus 0.1 last on the month over month number, and the year over year number expected to be up 1.1 versus 1.3 last. That's the important one. You've also got Canadian retail sales month over month. That's at the same time expected to be up 0.4 versus up 0.8 last. And then you've got Baker Hughes rig counts, as always, at 12 noon. Last week, Baker Hughes rig counts were unchanged at 952. But when you strip out the natural gas rigs, you had an increase of 2 oil rigs. So there was a little bit of a bump up in the oil rigs. That's about it. Let me turn it over to Mike to let you know what he's seeing on the charts. Mike, it's all yours.
Thank you very much, Bob. So, VIX, lowest close of the year, 951. Not the lowest low of the year, still 937, but this is definitely the lowest close of the year. If you go back 20-year chart, which is all the data I can pull in this application, you can see if you cut across here. This is the lowest close in 20 years. I believe this is the lowest close since sometime in 1993 or somewhere back then. So this is very, very low VIX. What happened this week to drive the VIX down? Let's take a look at that. Let's go over to some of our futures charts. Start with the Dow futures. Dow futures, we had our couple levels here that were hit. You can see here our 21,544 was hit on Friday, and then our next level 21,601 was also hit. The actual high for that day was 21,628. Next key levels we'll be watching are 21,638, and the next major level we can project up is around the 21,740 to 21,767 area. Those are next key levels. So that's what we'll be watching for. If we do pull back now, 21,554 first level support, then we'll be watching for the breakout zone, 21,508. If we do fall below that, the 21,455. Switching over to the S&P. S&P also hit new highs. So let's expand this out. Not quite to our key levels yet. We're going to be watching for a continued rally to 2,464 to 65. Then above that, 2,478. If we do pull back, very strong support, 2,451.50. Then we'll be watching for about the 2,447.50, and on a bigger drop to 2,438. Switching over to the NASDAQ. NASDAQ not reaching new highs yet, but nearly getting to our key defining point on our trend line. So on a continued rally, we'll be watching for 58.52 for first resistance, then 58.65, which is a prior breakdown zone. Then we'll be looking for 58.95, then 59.07, the most recent highs. On a pullback, you can see how we got above this trend line, retested it in the next day. So that's going to be a pullback level, 57.8650. Then we'll be watching down around the 57.6750, and then finally around the 57.52 area. Taking a look at crude. Crude also nice multi-day rally, finding resistance both last week, earlier this week, and on Friday at the 50 EMA. So if we can get above Friday's highs, which are about 46.75, next key level is 47.05, then the defining point on the trend line, 47.32, right near a prior breakdown zone, then 47.89. On any pullbacks, we'll be watching for about 45.80. Then we have the first cross rotation zone coming in at about 45.56 to 45.39, and on a bigger drop, the 45.10 area. Switching over to gold. Gold, you can see a nice strong rally also on Friday, getting just above our 25% gain level, coming in at about 1227.50 to 1228, rallying up just short of the upper end of the rotation zone, the declining 200 simple, and another key gain level. So this 1233 area to about 1234 is going to be very key resistance on Monday. If we get through that, 1239.50 to 1240, then we'll be watching longer term to a prior breakdown zone and the 50 EMA coming in at about 1244. On a pullback, pretty key support about 1226.50. If we get below that, we'll be watching for 1224.50, and then on a bigger drop back down to 1219 to 1220 area. Finally, to wrap it up, over to silver. Silver, you see outside day where the low was lower than the prior day's low and the high was above the prior day's high. And it also was an engulfing line engulfing this candle for our candlestick fans. So continued rally on Monday. We'll be watching for about 1603 to 1607 key resistance. Then the 16-17 area, prior breakdown zone from here. Just above that, about the 16-20, that's going to be the upper end of the rotation zone, so it's very key. Then if we do get through there, about the 16-25 is going to be the next level we'll be targeting. On a pullback, 1580 first level support, then major support coming in about the 1565 to 1568 area, and then if we drop below that, 1558. That's all we have for you with this weekend futures update. Back to you, Bob.
Thank you for that, Michael, and thank you guys for watching. Hit like and subscribe if you like what we're doing, and there is episode 80 of the Money Path podcast out there in the ether now. Check it out at pathtradingpartners.com or type in the Money Path podcast into iTunes or Google Play. Leave us a comment if you like what we're doing, and we will see you in the next Path Chat. Cheers, everyone.